So we have Chartered Accountants sponsoring us through your whole journey so you can learn how to turn your amazing ideas into successful business. And then Chartered Accountant decided to be a part of the project because they know the importance of knowing the numbers. We can want to change the world. We can sell a lot of things, but if we're not managing how much are we spending, how are we managing our time and our money, and how are we paying for things, and what day are we paying what invoice, we're not going to be able to progress with our business and continue creating an impact. So we have the amazing Lauren, who is the ambassador at Chartered Accountant, coming in, logging in to share her experience with us. So why have we partnered with CA? Because CA is very aligned to our values. They love creating impact with the youth. They know that you guys are not the future. You guys are the present. You're the leaders. You're the ones who are shaping our society. So we want to give you guys all of the skills. We've spoken about pitching. We've spoken about marketing, ideation. Now, in this final session, we are talking about finance with an expert who is very passionate about this topic, has a lot of experience, and she's going to be sharing her tips around the importance of knowing some very important words that they look scary, but they're very important for us. So we're going to make it really easy to understand, and we're going to put that within your business. So, Lauren, who are you and why do you love accounting so much? Give us a little bio intro, please.
Thank you, Paula, and hello everyone. It is so exciting to be here today and to talk to you. So as Paula's done a great job at introducing, my name is Lauren and I come from an accounting professional services background. So I've had a lot of experience in dealing with different types of industries, but primarily in banking and insurance companies. And so I have also been a chartered accountant for 2 years now, but have really been involved with the chartered accountants since my first year of university. So it's been many years and I've really been engaged with them, and throughout my career they've given many opportunities to just show like that accounting is so much more than numbers, and it's now about analysis and making business decisions, and there are so many key important topics that we need to know to be able to actually be successful in our business. And like Paula said, we can have these great ideas and we can have lots of revenue, we can have lots of really good interests and innovations, but if we're not managing our finances and we're not understanding what our finances are doing, then that can actually impact our own business and maybe not even make it a successful business. And so today, we're really going to talk through that. So that's a bit about me, but I want to also talk a little bit about what the CA does and the Chartered Accountants. So Chartered Accountants are a professional body, a wonderful professional body, and they are basically a body of all well-rounded business leaders. So their main goal is to strive to make a difference in our business world and in society as well. So really what they look at is things like technical accounting skills, but also the soft skills of leadership. And so that includes, again, being able to lead, being able to drive business decisions, being able to understand the numbers and understand operations and how a business can perform. And they actually do a lot of critical thinking and answering and not only answering, but actually asking those complex, critical questions that are going to keep the business at pace and with a lot of momentum. So we do this and we learn the course itself to become a chartered accountant is actually through first studying an undergraduate degree in business, accounting or finance. And then you go one step further in completing a CA program, which obtains an accredited and internationally recognized postgraduate qualification. So we have chartered accountants in many areas of the world. So if you think of a country, I can probably assure you that there will be a chartered accountant in that country somewhere. So the accreditation has certainly helped me in my career so far. And it just opens up so many doors and gives you just a way of thinking about the profession and thinking about the future. And so chartered accountants are very much at the forefront of future business and also thinking about things like sustainability accounting now and other types of things that are not just your traditional kind of debits and credits, if you've heard of that. So a wonderful organization.
And it opens all doors, right, Lauren? Like it's crazy. I've traveled the whole world and you meet someone, they don't say that they're an accountant, they say that they're a CA, and then you're like, wow. And anything they say, you automatically trust. It's almost like being the doctor of the accounting world. And it's used as what you said, like it's valid around the whole world. Once you've got the certification, you are respected all over the world. And what I love, I mean, I've always absolutely loved numbers, because business is about number. It's about your growth on Instagram, growth in sales, cutting down cost, optimizing your productivity, cutting down the amount of steps so we can do things faster and get our results in a quicker way, more efficient, so that we can free time to do something else. So accounting is so much, and I worked a lot with the accounting organization here in Australia last year. And I remember us working on the customer service, because it's a combination of leadership, communication, psychology, everything comes down to numbers. And I can see we've got Ant here with us. Hello, Ant. She's one of the big bosses at CA.
Hi, Paula. Thanks for having me.
Surprise.
No, it's a great pleasure to be here, and I'm even more delighted that we've been able to get the support of Lauren, who I know this is really right in her sweet spot and her passion project. So it's good for all of us.
Yes. And we had an interesting conversation about 2 weeks ago around how accounting is used in every single industry. So if you love sports, you can be an accountant for your favorite sports team. If you love fashion, you can be an accountant for your favorite fashion brand, Disney World, or for Instagram and YouTube influencers. Every organization, small or big, needs accountant everywhere around the world, right? So you can combine your passion and it's applicable anywhere. And once you've got the CA certificate, you can use it across the world. So Ant, can you share a little bit about why you love so much working at CA? Because every time I talk to you, you just like, you shine and you've got your dream job and you're making the world a better place by being a leader in CA and developing leadership and supporting programs and empowering leaders like Lauren to shine and reach more students to create an impact. So why is it that you love working at CA so much, and what is the impacts that you guys are doing inside head office in Australia?
Well, let me go back. If I can go back, and my apologies, Lauren, I was logging in to listen to your wisdom and insights, but look, for what it's worth, I want to go back about 20 or 30 years, and that whole, I suppose, perception of what accounting and accounting study was about. And unfortunately, it probably hasn't changed much. And I'm not saying it's good, great, or indifferent. It just hasn't changed as much as we need it to change now. And so I probably always thought that accounting study meant I had to become an accountant. But what I realized was in my sort of mid to late career, or my current career, is that, for me, it was about accounting study equals accounting skill, and it's a life skill. And, I had a passion for marketing and advertising and other forms of industry. And I was able to use my accounting skills to, I suppose, break in to these organizations. And then what I realized over time, that becoming a professionally qualified accountant wasn't about, an end game. It was actually a ticket to the big game. And I was able then to, actively participate in the profession, whether it was in networking groups or committees. But equally, I was able to support, I did music at high school as well as sport and traditional academic subjects. And, I sat on a board of a music charity. I've sat on a board of a bank or a credit union. I currently sit on a board or an advisory board for a charity called the Joe Lee Foundation. But I bring each time to those occasions the skill that I've accumulated. And I think this is the challenge for young students. And I've got a young daughter in year 10, and we're not, too far off the conversation around why would I consider this? And more importantly, what can I achieve with it? And I think what Lauren's undertaking today on behalf of us and the profession more broadly is there's an element of having the foundations of literacy and the importance of having good comprehension, because Paul, you're a businesswoman, and the reality is, whether you're a general manager of marketing, a general manager in law, or HR or accounting, there's always a P&L and a balance sheet and a forecast waiting for you around the corner. And I think where I'm really excited about the work that Chartered Accountants has undertaken more recently by, future-proofing the CA program, embracing all the changes in technology, and Lauren talked about how you can use it to save the planet and things like it through the SDG applications and similar. But ultimately, it's about equipping yourself and knowing how to apply it. And if I had my time again, I'd do it all over. I would rinse and repeat, because I just didn't realize not just the qualification, but the global impact you can have by not just working within Australia, but across the globe. So, and as for your question around why CA and what we're doing, we're blessed to have a really good executive who are really focused on the future of the profession. We have a really superior education arm. And, for us, our role is to influence, high schools, university students and young professionals about making sure that they see beyond the hump. And again, Lauren's an exemplar of it. I met Lauren at the start of this year, and she made my heart sing, because not only was she completed her studies and the like and her CA program, but just her zest and her energy just to keep paying it forward. And I think if we can reset the narrative around what it can be and make sure mums and dads and careers advisors and teachers truly understand what a career built on accounting skill really can be about, we'll see a significant uplift. And again, I'm really thrilled that, Paula, you've given us this chance today, and more importantly, the relationship that's going to evolve over the coming period. So yeah, really delighted to be here.
The reason why I connected with you guys is because I know how important numbers are for your business, but also having the right accountant in your business, because the right accountant will help you maximize your tax benefits, apply for grants. Like every time Accountant has been contacted by the government to apply for a grant, we had to have an accountant looking and signing off and shaping the Excel spreadsheet and helping us crunch the numbers. Like Academy Entrepreneurs would not be where it is if we didn't have amazing CA accredited accountants around the world helping us maximize the numbers. And I love in the last section, Lauren's going to be talking to us about pricing. Like, how do you cut down your costs so you can have more profit, so you can continue growing your business, create better jobs, and maybe even innovative products and services. But let's get started, because I know that we're going to have a lot of questions. So let's get started. I'm going to mute myself, and Lauren, you just literally go next. You just say the word next, and I'll click on the next slide.
Okay, let's do it. Thank you. So we can start. Next. All right. So we are today going to be focusing mostly on profit, and we don't want to be scared about this P word and the difference between revenue, expenses, profit. We're going to take you through it one step at a time. But I wanted to do it in a way that it can be relatable, and I'm pretty sure everyone on this call likes cupcakes, and if you don't, then we can have a chat after it, because maybe you're not having the right ones. But what we're going to be focusing today is looking at an example online business called Paris's Cupcakes. And Paris is a businesswoman. She works from her home. She's got and she basically creates cupcakes, sells them online, and then delivers and distributes them to her customers. Like I said, everything's on home. We can go the next, thank you. And she's been 2 years into her business. She really doesn't have a lot of overhead costs, because she's already got the oven that her mum and dad kindly gifted to her. She's got, the storage of the fridge and other kind of infrastructure, like her utensils and things like that. So she runs it all from her home. And then to advertise herself, she's all about through social media, because she targets for that kind of audience that are on there, just wanting to see, get some catering or delivering for food and for cupcakes. And so that's a lot of her marketing expense comes from Instagram. So if we move on to the next slide.
So now, guys, we're going to introduce you to some words that can look scary, but we're going to simplify. And Lauren's built a beautiful case study around Paris's Cupcake. So we're going to introduce three very, very, very important. Write down these words, because these words, you'll use them forever as an entrepreneur.
That's right. So if I might start, I'm going to start up front with the key message I want you to take away after today's session. And that key message is extremely important. It's to say that you can have as much revenue as you want. You can have the best idea. You can make so much money in sales. You can get the best target audience and attract them and give them money. So get money and sell them. So sell them your cupcakes, sell them your products. But if you do not manage your expenses correctly, then that can actually lead to lower profit. And that's your key message for the day. And we're going to go through that in piecemeal, right? So I mentioned three important words there. The first was revenue, the second was expense, and then the third was profit. And today we want to go through how each of those are interrelated and how we can pull levers within each of those areas to actually boost our profit. So let's start at revenue. Basic dictionary definition that revenue is income, and especially when of an organization and of a substantial nature. So in this example, we've got revenue would be what the primary business activity is. And so the primary business activity here would be Paris selling her cupcakes. Okay. So anything she gets from selling the cupcakes, the actual money that she receives, that would be classified as your sales revenue. So that's where you start. That's kind of like the money coming into the bank account. Now, if we move on to the next step, which is expense, again, basic definition of the cost incurred or required for something. So this is money coming outside of the bank account. So it's the things like your ingredients. And we'll get into the example with Paris, but it's anything that you are charging or that you need to actually make the sales revenue. Because we have to remember that it's all well and good again to be able to sell and to make sales revenue, but there's always a cost of goods sold to be able to distribute those costs, to be able to distribute the cupcakes, which then leads us to our third keyword of the day, which is profit. And this is where you actually take your revenue and you take your expenses and you find the difference between the two. And that actually results in a financial gain. So your profit can be, we can talk about what you do when you do get to that profit, but that is essentially your end reporting. And it's a very, very important key business metric because it allows you to actually do things with that. So you can reinvest profit, you can keep your profit, you can give it back to some. It depends on what you want to do. But at the end of the day, that is a lot of the time what people will look at to estimate how successful a business is, and also how much of what we call in accounting a going concern. So which basically just means how much of a likelihood is it for you to continue to run your business. So revenue, expense, and profit, all revenue and expenses are obviously the key inputs to profit, but those three words are and managing them are extremely important to really ensure that you're getting the right business metrics and you're getting the right approaches to managing those key finances. Now I'm seeing some questions come through. Paula, would you like to maybe do that at the end, or we can go as we go?
These are internal questions. Our questions are coming through Facebook because we've got the students watching it on Facebook. So Lewis will come in maybe 10 minutes for us.
Perfect, no problem. Okay, thank you very much. So we've spoken a little bit about, I think, what that means. And if we go into now a case example. So again, with Paris. So let's say Paris in 1 year sells 50 cupcake packs and she sells them at $15 per pack. Revenue would then be a product of both the amount of sales volume, which is the 50 packets, and the sales price, which is $15. So that product then becomes $750. So we say that revenue number is now $750. If we move on to make that revenue, we also need to be putting in, like I said, so that's the expense side. So things that need to come outside of the bank account. And expenses, you can probably think of some, but she needs to pay for not only her cost of goods sold, so that's things like your ingredients, your icing, your flour, but expenses don't stop at just making the product. You always will have other expenses. So how do you market? How do you sell and distribute your goods? And these are all things you need to be considering when setting up your business, because they, at the end of the day, can ultimately be massive drivers behind taking away your revenue. Yeah, you want to think about your revenue as kind of wanting to protect it, and an expense is something that's trying to take it and steal it and actually bully your revenue. We don't want that. So what we need to do is actually think about altogether, what are the expenses that are going to be coming out of my bank account to be able to support being able to distribute the cupcakes? And in this case, Paris will have to pay for, like I said, the ingredients, the cost of stock goods, the sales and distributions, but also things like electricity and internet bills to be able to substantiate and to uphold her business. And so a lot of the times people can go into business and not really think about those incidental costs or those incidental expenses, but really they can have a big weighting. And if you don't carefully manage those expenses, then unfortunately you can have your revenue kind of stolen and taken away a little bit from you. So we'll move on to the next slide on that. When we get to our third key term of the day, which was profit, again, that becomes a lever of revenue minus expenses, or a definition of revenue minus expenses. So we simply take our $750 and we'll assume that all of those expenses we mentioned were $300, and we take away the $300. So of that $750 of revenue, we are only pocketing and getting in profit $450. So I just want to reiterate the fact that our revenue was at that 750, but that doesn't indicate success at this point, because what does indicate success is that second line item, being that 450, to understand, well, what does it actually mean, and how much do I get to take home, and how is that being impacted? How is my 750 being impacted, which is from that $300 expense. So we can move on to the next slide, please. Okay, great. And that's why I wanted to spend a little bit of time today on managing expenses, because like I've said, your profit will largely be driven by that. So if we think about options for expense management, Paris was able to buy her flour, but Paris could have bought flour at a premium price, or she could have bought flour at a really cheap price. So the difference, as you can see on the screen, is $1 and $10. Now, the trick here is not to think that, oh, well, easy, we go option A because it's a lot cheaper. Whilst, yes, that is a very feasible option, and it would protect that revenue again and allow you to fight off the bully of an expense, we have to always think about the fact that what managing expenses isn't only about just the pricing, it's about the quality. And if you think about it, you might have a great, you might be able to manage your expenses and put them and like push them real down. But at the end of the day, if that's going to impact the quality of the cupcakes, then maybe that could lead long term to having Paris not be able to sell as many cupcakes in the future and damage her branding. So my point here is to think about when you're managing expenses, it's very, very important to be able to get the best price you can, but not to compromise on your business model, your business branding, and maybe any quality expectations that you would want to get out of your end goal, because this could affect you long term and therefore affect your sales revenue, which again is going to not protect that revenue. So that's why expenses are extremely important from that perspective.
And in the course, you guys learned about pricing. So it's just like, okay, first we learned about what problem are we solving, who's the ideal customer, and then we just went, how much will the customer pay me to solve this problem? And what is the problem that I'm trying to solve? So say, for example, you have a dress business, and it is targeting really busy girl boss entrepreneurs that don't have time to plan much, and they need to pick a dress and get it delivered in 24 hours. What does this mean? This individual is willing to pay you guys a lot more for you to deliver fast. But if you go in and you cut out the expense of delivering fast, you're breaking your promise to the customer. So if you promise them fast delivery, they'll pay you more for the dress you get in 24 hours, but that will cost you more to deliver. If you've promised the healthiest cupcake with almond flour, that's going to cost you more, but that is your promise. So I love what Lauren was sharing with you guys. It's stay true to your promise. So you can cut down costs, but depending on where you're cutting cost out, you're lying to your customer, you're misleading them, and then you're going to lose the sale forever. You're never going to get it again, or you might get a complaint and you'll have to refund them. So when we're cutting down costs, you cut down everything you can, but you still deliver an amazing product and service for your customer. So that's something super important for us to consider, because it's very tempting to go towards the cheapest. And this is why when you go to a beautiful restaurant, it is a lot more expensive, but they're giving you the best quality ingredients and best quality service and live music. There's a price for that. And you're not going to go to a fancy restaurant every day for lunch, but on a Friday night, you want to pay and you want to get that amazing service. It's understanding what is it your customer wants, And then how much does it cost you to deliver that? And then you need to add your profit. So at the end of the day, the end of the week, the end of the month, you've got money saved up in your bank so you can pay yourself and grow the business as well. I'll click on the next one.
Absolutely. Thank you. And that's why when we think about that, back to that revenue side, it was like, well, revenue we know is a product of the pricing and the volume. So if you're going to be giving that premium service, and if that's your promise, then like Paula said, people are going to pay a little bit more, a little bit extra. So you can adjust your revenue or adjust your pricing as well as adjusting your costing up. But at the end of the day, that profit margin would likely be the same. And that's what you're trying to manage. You're not necessarily trying to be the cheapest out there in the market. That might not be your promise. But what you're trying to do is to manage the relationship between revenue expenses to then be able to get to a healthy profit, which allows you to continue to succeed in your business and allow you to invest in other products potentially, or keep going and really build your profile, build your business, which you can do. But you just need to have that successful management, especially upfront, because we know that the hardest years in business are likely, or most of the time, to be at the first couple of years. So I think that's a really key point to just communicate here too. So before we do get to question time, just wanted to say, so I'm obviously a CA. I've got, and I'm really excited about all topics finance and accounting. I think that honestly, everybody needs to have some basic understanding to really be able to succeed. And like Ant was saying earlier, no matter what area of even, I'm going to say, occupation, not just in business, but in occupation, you'll always need to have a good idea about what the final financial impact is on. And so I've got an Instagram, which is at the Student Investor Studio, and I'm just going to be posting a lot of basic finance concepts that we can talk about. And just so give that a follow. It's just going to be really light touch, like basic stuff for you to just get an idea of really important key terms like working capital and ratios and what tax is, and disclosures and all other key things that you'll have to know as you navigate your way throughout the business, which I'm so excited to kind of see what you guys are doing. And I should have said earlier, but congratulations on taking this step on the journey, because I think it's such an amazing thing, and you must feel really excited. And I hope to contribute to that excitement and into your journey. So great to kind of virtually meet you all. Yeah, we can probably move on to the next slide. Great. So I cannot speak more highly enough of the CA and all of the opportunities it's provided me. I think we've done that. But I want you to also experience the greatness of the CA, and it's actually a really simple step to do this. On screen is what we call the CA Student Affiliate. So I did this as a first year university student, and it was amazing because I would become an affiliate of the CA, and I would get comms about things like internships, which as you know is a really important part to get exposure to business and to understand how things work in the real world, and to really kind of transform just from studying things to then seeing it in real life practice. But it's so much more than that, because it gives you an idea and an overview of the business, the accounting industry, and it gives you just a lot of guidance and inspiration on what the future of accounting looks like, what the present looks like, and what maybe people that will eventually inspire you can give you. But also it gives you a lot of career opportunities like networking, and could be a whole nother session, but networking itself is a really important thing. I honestly, from a personal side, am so inspired by the people and networks I've met, a lot of them honestly through CA, and that support that I think I get from the CA and then from my network really drives me and again just inspires me. So I want you to have that same inspiration and that same kind of exposure. So absolutely QR code, the QR code on the screen, and you'll start to just see the magic of CA, including work experience videos and other advice stuff that will absolutely help you no matter what business venture you're in. So I think that is the end of it, and we can probably open up to some exciting Q&A, which I'm really keen to do.
Lewis, we need your help. Thank you, Lewis, for helping us with the questions.
Thank you so much. So let me just say a couple of hellos to everyone that is connected to our Facebook Live. So Hello to Josel. Good morning to Erica, Kiara, Nicole, Maureen, Ella, Christine, Ariola, Rona, Altisha, Nicole, Joy Serrano, Marifer, Persia, Baclau. All right, so we have a couple of questions here. And the first one is, what is the difference between profit and cash flow?
Okay, absolutely. Great question. So cash flow is, think of cash flow, and it's a great, like from the cash side, right? As it says, cash flow is anything in your, let's say, bank account, cash. So the actual money you have. But profit is, this is a really good question, because profit differs in the way that you can have non-cash expenses included in that expense part. So when we spoke about profit, we said, all right, profit is revenue minus expenses. But within those expenses, you might have things like, the first one I can think of is you would expense depreciating an asset. We don't have to go into the detail of that, but there would be things that you would record as an expense that doesn't actually involve money coming outside of, like, from a cash perspective. It's not a cash outlay. Whereas cash flow talks more about receiving and transitioning cash. So a good example could be, let's say Paris sold a packet of cupcakes, but she sold the cupcakes to a customer who paid on credit. So Paris is actually allowed in her profit or loss statement, she's allowed to put revenue from that customer. It's what we call accounts receivable. And she's allowed to book that, and she's allowed to say, yes, that is part of my revenue. However, remember, Paris didn't ever receive the money for that pack of cupcakes because the customer paid on their credit card. So that would not be included. When we talk about cash flow statement or cash flow, right, that's actually not an input into the cash because she never received cash from the proceeds. And what that would mean is that although Paris was able to record that as revenue, she can't actually use that revenue or the cash or any cash, because she has no cash, to then spend it on other things like investing in a great oven or new utensils. And that's why revenue and profit and cash management are very distinct things, because when you look at like a cash flow statement, sometimes it's in the best interest to actually, as a business owner, put things on credit. Because if you're now the business, right, and your suppliers, let's say Paris went out and bought a pack of flour, and she put on her credit card. She didn't give any money to Coles, for example, the supermarket. She actually only put it on as a credit card. So on her credit card, which means that it would be recorded as an expense. But from a cash flow perspective, Paris gets to keep whatever cash she has. She can defer paying that expense of flour until a month's time. And maybe in that month, she uses her cash to do something else, which actually generates more money for her. And that's why cash flow management is really, really, really important. And it is another topic that I'd love to go into, but that's, I think from a high level, the key distinction.
Awesome. Thank you for that.
Great.
Let me see. We have quite a lot of questions, but let me just say good morning to Joshua. Good morning to Catherine. Good morning to Russell. Good morning to Ross. Okay, so next question is, how do I budget? And if I don't know how much I will make, if I don't know how much I will make, how do I budget? This is my first business.
Okay, that's a really interesting question too. So typically when we look at budgeting, there are a number of ways you can do it. If you're starting up your first business, my best point would probably be that you would use proxy numbers. And so you could look at maybe similar businesses or similar ideas of what is being generated. If you don't have access to similar proxy numbers, then a good idea is to always start from an assumption of how much you will be producing and then how much you expect to be selling, which would be driven a lot of the times by what is the customer reach that I'm going to have. So for example, if you start your business and you know that you're going to be able to hit 100 people from a marketing side, as opposed to thinking you're going to hit 50 people. That will adjust how much you're able to sell. And to be honest, there is no correct answer. And that's a really important point. Budgeting doesn't mean it's the actual, that's why so many businesses have a whole teams dedicated to people that look at budgeting and the actuals, because you never actually know. So I just want to start on there. It's a really good question, but it's okay to not know as well. I think that what the best thing you need to be doing is at least budgeting from what you do know, which is from your inputs, like, as I said, your sales, your marketing, the products that you actually are offering, and the timeline to go into the market and being able to offer that product.
I think when you guys are budgeting, right at the beginning of the course, like module 1, we spoke to you guys about SMART goals. So what is it you want to achieve? So be specific, make it measurable. So is your goal to sell 5 cupcakes to 5 different customers in the next 5 days? So that's doable. That means you need to either do a lot of marketing and sell 5 in the 5th day, or you're going to be selling 1 a day. So for you to achieve the 1, how much money are you going to spend on Instagram? Do you need to buy the flour and chocolate and icing? Maybe you don't. Maybe you can slowly get paid over the next 4 days. And on the 5th day, you go in Woolworths or Coles and you order online and you get it delivered the same day. So it's about managing based on, and I love what Lauren said, just look at what's everybody else doing around there. How much are they charging the cupcakes? How can your cupcake look different so you can get your customers to be interested? Convince them to buy from you because your cupcake has less sugar, or it's bigger or more beautiful, or has a unicorn and it glows in the dark. It doesn't matter. But how are you going to get customers to believe in you, pay you based on something that is different to everybody else, but ideally at a similar price in alignment with what you're offering? Because if you're going to offer, have you guys noticed that when we're going to buy, I don't know, healthy food, it's always more expensive, always. But people are willing to pay more because we know that health is priceless. So if you're going to have the most delicious gluten-free, fat-free chocolate cupcake, people are willing to pay for it. But you have to budget around, that's a niche audience, how you're going to do the social media, quality of product, and you start, a lot of it is you're guessing, but not just guessing any number, it's building it around your SMART goals. So go back to the beginning of the course and just go, what problem am I solving? What is my SMART goal when it comes to finance? How much do I want to sell? And how do I break it down step by step into going, if I sell 5, how much will I win? Will I have $5? Is my time, if I work nonstop over the next 5 days, if I only have $5 left in my bank account as a profit, is it worth it? Maybe I could start dog walking and get $30 an hour, and there's no expense in it because I can just ask my neighbors if I can walk the dogs. And this is the beauty of business. The sky is the limit of what you can achieve. You can achieve anything. You can make as little or as much money as you want, but you need to set your goals. And when we set our goals, everything is possible. Because we wake up and we're like, I need to get a cupcake sold because that is my goal. It's 1 a day for the next 5 days. So set goals and then build your budget around that. But I love what Lauren said. Look at the market. Don't be crazy and just going, I'm going to sell cupcakes to everybody. You never will. Because even Coca-Cola can't sell soft drinks to all of us. And don't also go, I'm going to sell my first cupcake at $150 when no one even knows why your cupcake is so good. Let's be realistic. So it's good to see what are the competitors doing, because if they're succeeding, that means there's a huge opportunity that you can succeed as well. And then go back, guys, to, I think at the end of module 1, when we looked at SWOT analysis. So what are your strengths, weaknesses, opportunities, and threats? And build your price around that, around what it is that you're offering, aligned to your target audience and the personas. But yeah, it's a little bit of guessing, and it's crazy that we're answering your question. We just go, oh, we can't give you the final answer, because that's the reality of budgeting. Even pricing, we have to tweak. Like someone called me this morning and they've got a 20% discount for all of our students. And now there's a Black Friday campaign, which is 47% off all of the products. So what happens is that on Black Friday, if everyone's discounting, you're going to have to do the same. Because it's a global trend that on one Friday of the year, the whole world goes on discount. So, yeah. Or maybe you're going to join the green movement of not promoting anything for the day to be sustainable. But where does your business sit in pricing, budgeting, and most importantly, what Lauren said, your promise to the market. If you promise best quality, you're going to have to buy the best quality flour. So you might have to spend $10 on a bag of flour. So awesome question. Lewis, sorry.
I was just going to add, budgets are also things that are updated constantly. So you might want to do, if you're starting out, you might want to do a budget every month and roll that budget and reassess what you're doing. It's absolutely okay to get a budget like not a bit off, and you probably will until you'll never get the absolute accurate numbers there. But reassess it as you go. Like if you're starting on, selling 20 cupcake packs for the first month and you budgeted for 50 cupcake packs, then from month 2, you should absolutely be adjusting that down and rethinking and reinvigorating your business. So it's a moving piece. It's always live. It's always changing. And that's the exciting part, right? So just remember that and keep going on it.
Yeah. And when you're building your pricing strategy and also budgeting, it's important for you to consider that sometimes what you promise to the customer, so you promise them the price, and you as an entrepreneur might have some different expenses. For example, currency exchange. So if you're having the product coming over from China or the US price can go really high, and then suddenly where you had budgeted, now you're gonna have to pay more to get the product arriving. Or delivery. We've seen a lot of shifts in the last few months, or the last, 2 years. Some things have become a lot cheaper because we're getting them locally, but other things are taking so much longer or costing more money for us to get from overseas into Australia. So that's something that you'll be tweaking with your budget. And often you as an entrepreneur, you have to absorb. So if you've made a mistake and you haven't forecast, maybe we always calculate around 10%, right, Lauren? Like when you're building an event, you always budget for 10% or more. And when you build, it's always good to have a 10%. Yeah. And I love operating businesses when it's like trying to have 30% profit in a business. I think that's the nice balance throughout the year. So trying to have a 30% profit margin, because that just keeps you safe, so that if you struggle for the next 3 months, a year later, you've got the money saved from the year before for you to breathe and plan out and restructure your budget for the next month. Lewis, what other questions do we have?
Sure. Yes. So I would like to say hello to Hector Quina, who is watching this live all the way from Ecuador.
Wow. Hello.
That's amazing. So next question is, why does everyone say that I need to separate my personal account from my business account?
Great question. So I'm going to add to everyone needing to say that, and also say you should probably do that too, because, and the reason is it's actually quite simple. It's to make your life easier, to put in a nutshell, because when you get to things like tax time, as an example, and you want to make tax deductions from earning an income, then it's easier to see the cash outflows and everything to be able to claim. That's one example. But otherwise, it's just important because it gives you better record keeping responsibilities. So if you think about your businesses, I'm sure you've got some amazing ideas out there and it's going to grow completely. And so when it does grow, you want to be able to see the breakdown of the inflows that you're getting, as well as the outflows. You don't want the mess of personal business in there, because then that gets really difficult to do your record keeping. And record keeping is an essential, critical part in maintaining and managing finances. To be a good finance person and to be good at understanding your numbers and how your business is performing, you 100% need to have good record keeping. And good record keeping is clean, and it doesn't include things that are not relevant. So your personal expenses and your personal income are very separate to what the business is doing and how the business is performing. So that would be the main reason why you'd want to separate it.
Yeah, and it gets really tricky, guys, because when you've got a business, let's say you've got the cupcake business, and then if you're going to pay for your gym membership, and then you go to the beach and you have to buy sunscreen, and then you get an Uber to your grandmother's house, if you run that in your business or you mix them, how do you prove to the government on what you're going to pay tax or what your profit was? You don't know, because you've mixed it in a way. And anything that you buy for your business, if you buy a pencil, if you buy a phone, if you buy a charger, if it's a business expense, it will be deducted. And so you'll put on the Excel as an expense. But if it's a personal expense, like buying sunscreen for you to suntan on Sunday morning, that is not a business expense. So that you can't deduct it as an expense. So you have to pay it off your personal bank account. So separated. Most banks, especially in Australia, if you talk to them, they will set up a business bank account and you don't pay anything. Some banks charge you $10 a month, but most banks in Australia, when you ask them, they'll give you 0 fees on a monthly basis. So it doesn't cost you anything to have 2 separate bank accounts. And then if you, depending on what bank you use, you can manage both banks on the same app. So whatever bank you use, they will say the business account and your personal account. And then my suggestion is also have a saving account for your personal and a savings also for your business. So you always have money saved up to make big decisions, big investment, or maybe even be able to take a month off to go on holidays and have enough money so your team can operate it for you. So that's something really big. So Lauren, when it comes to, you said making it very clean, like organizing, where do you suggest we organize? So in the course, we've put an Excel spreadsheet for budgeting, for managing expenses, profit and loss. What do you recommend us for all of us that are logging in from Australia? Is there a specific software or something like a freebie that we can get started on that we can throw in the cloud? Do you have some recommendations around that? And then we'll put that in the course.
Yeah, for sure. So I think from a record keeping side, there are some amazing platforms out there that are good for small business. I think it's probably best to do some research into which ones would suit you. But there are options where for subscription fees, and if you're a small business where you're not employing people, or you're on your own, or maybe you're under 10, you actually pay a bit less for that subscription. So it is kind of scaled to the size of your business. So there's that side of things online, but also you can, for your own expenses and your own kind of record keeping, if you are quite small and you're new and you don't need that extra software to an expense, then those worksheets and Excel spreadsheets are very good. I'd also look at things like there's Microsoft Project, which allows you to kind of plan out product timelining and things like that, where that's more from an operational side. But you should really just keep a record of everything. Also have specific folders, whether it's electronic or at home, that separates the types of expenses, the revenue invoices, the receipts, etc., to then be able to do at year end, kind of combine that and understand what your total management looks like.
So legends, for all of you guys, when you go into module 3 in finance, you can download the Excel so you can type it in every day. My suggestion for you guys is drag it into Google so it stays in the cloud. So if you drop a glass of water in your computer, it's in the cloud and you're never going to lose the numbers. What I personally do is every time I buy something, even at a personal level, I take a photo of the invoice and I sent it to our accountant. And before, I used to do it manually and save it on the computer, again on the cloud. And it's a 2-second job that you take a photo and just put in a file. And if you use some of these finance systems, a lot of them give you 3 months for free or a discount when you start. And then you can automatically, my suggestion is always digitalize. Don't put next to your bed 100 invoices and then in the dining table and the kitchen table, because it will take you hours to sort it out. And most likely you'll make a mistake. And then when the tax officer comes in and asks you, how much money did you make? How much are we going to charge you for tax? You're going to go, I don't know. And that is illegal in every country around the world. So our suggestion is get this Excel. If you want to start without spending any money, get the Excel, put it on the cloud, just drag the file into Google Drive and start writing down. Put 1st of December, I bought flour and chocolate and icing and I spent $10. But I converted $55 in sale. So you just put in the other. So just put it into the columns so you can keep it all tracked. But my suggestion is take a photo with your phone. And again, throw it on the cloud because we all drop our phones and have lost many phones before. So speak from experience, separate personal from business and digitalize everything. Max is laughing because he knows that I'm always breaking my phones and laptops. It just happens when you're so busy as an entrepreneur. If you're baking hundreds of cupcakes every day and you're dealing with customers and then your team and then the delivery, the chance of your phone falling into the blender is really big. Especially if you're taking photos and videos for Instagram, because we're all multitasking. And at the beginning, we are every department and it's fine. It's fine to use free tools, but don't put it on a notebook because that's too dangerous ever. Cool. Luis, we have probably time for one more question. Do we have another question from?
Yes, but first I would like to say thanks for connecting to Catherine Lin, to Elvia Pinkai, to Emily Rose, and to Maranel Salting. All right, so next question is, how does tax work in Australia? How much do I pay and when do I pay as a small business?
Okay, great. So that one, there's no kind of direct answer to, of course, because it's tax. So there are sometimes a lot of rules, but try to give you a bit of an overview of it. The tax that you pay on your business does depend on your legal entity structure. What a legal entity structure means is how you've set up your business. So you might have set up your business in partnership with someone. You might have set it up on your own as a sole trader. You might have incorporated the company, so it becomes a company, and then that means you would pay what we have in Australia, a company tax rate. For sole traders and small business, it would usually be depending on kind of other factors, and so this isn't like a blanket rule, but an example of a business model could be that you are a sole trader. So Paris, for example, we'll go back to her hypothetically. She works on her own and she earns, let's say, under 75,000 in her business a year. So what that would mean is that she doesn't have to pay GST on that because she's under the 75K. But when it comes to income tax, all the money she made, she would lodge at tax time, and she would have that as a component of her total income, which is then taxed. So another thing to just point out, I mentioned two different types of taxes there. I did income tax and I also did GST, so the goods and services tax. So just remembering that tax isn't limited to what you kind of earn. There's also other elements. If you have employees, you might have a fringe benefits tax. So these are other types of taxes, but we'll keep it simple. We'll keep it from Paris's perspective, and all she does is pay her income tax. So whatever money she makes goes towards her total income for that year, and then that whatever tax bracket she falls under, because she might have another job or she might have other income earning, then you would follow the tax brackets within Australia. So those are published by the ATO and are in buckets for depending on the total amount of earnings that you have.
So guys, the way that it works, so go on just literally put on Google, and then you'll see the updated information from the government, because the government can change anytime, and all of us are forced to follow the rules. But overall, let's say that Paris makes $50,000 a year in sales of cupcakes. So the first 18 to 20,000, so it's 18,000, the government doesn't charge you tax on the first almost $20,000 that you earn. Then you have your expenses, remember. So 50,000, maybe you spent 20,000 in expenses of chocolate delivery. So that means out of the 50,000, let's go with 5, you've already had $20,000 worth of expenses. That leaves you with $30,000 in your bank account. But the government doesn't tax you in all 30, and this is the Australian government. So for those of you that are logging in from other countries, it's different. The government doesn't tax you on all the 30,000 that you've got left in your bank account. Because almost the first 20,000, the government just goes, you're a small business, keep the money so you can invest in your growth. So you're almost going to be paying just tax on the 10%, which is your profit. Then out of the 10%, the government, depending on your business structure, will charge you a different amount, but it's on average just under 30. So that means if you earned $50,000, you're going to be paying around $3,000, sometimes $4,000 a year. So Australia has a beautiful tax system. Like for me, it's one of the best. For those of you guys logging in from the Philippines, depending on how you structure, you pay 42% tax up front on anything you earn. So then when you are budgeting, when you're pricing, you need to include that. Because if you sell a pencil for $1, 42 cents can go to the government. Mm-hmm. So that means that you've got less money for your team, for your marketing, for the product, and so forth. So look at the different structures. So as we saw, there was a student logging in from Ecuador. So in Ecuador, it depends on where you are getting paid and where you're sending the money to. So any money that you send to another country, it's almost 10% that you pay tax on that, on just the transfer. So if you had to pay one of your suppliers, or if you're paying someone commission, on top of everything, when you've got money left over, you still need to pay the government a tax on top of the tax on top of the tax. So most governments have this information very clearly organized on the website, but the next step is for you to speak to a CA accountant in your local country that will be able to guide you, because they have a license where they can legally give you the right recommendation for the best setup for for your business, for the city and the country you're in. Because countries like the US, they have different rules in different states. So you don't have to know all of the details. You just need to have a really good accountant that will work with you. And in Australia, a lot, when you have a small business, you're often doing your tax on the 1st of July. So you've got every 12 months to really organize, but you need to look at your Excel spreadsheet and your bank accounts, even if it's 10 seconds, but every day. That's my suggestion. Know your numbers every day and just look, how can I cut down? Is this Instagram ad working? Is this beautiful box getting Instagrammed all over the world that's costing a lot? Am I getting the return of investment, or can I get a cheaper box? Or the box should cost more than the product, because then customers take a photo and they market your business, and that's your way of marketing and getting more customers. So consider all of that. Cool. Lauren, any final little tips? Because there's so much we can talk about finance, from tax, profit, loss, expense, budgeting, pricing. This is a never ending. Any final tips, and we can bring you over in a couple of, maybe, I don't know, weeks, so we can do another session with you.
Yeah, no, thank you so much for having me. I think just the final tip would just be around, I think like a theme of just constantly updating and challenging things, and not just taking flour to be $10, for example. Thinking about the small business decisions you make. They might kind of seem trivial, but they can have a really big impact on your business and on your profit and on your financial performance. And that's why it's so important to constantly, like Paula just said, constantly analyze it, constantly have a look at it, and think about what are ways I can do to keep improving myself and my business, and be okay with failure as well. You know, you're not going to succeed in every single business decision you make, whether that be financially or operationally, or whatever type of angle you're looking at it from. So it's all about, I think, being able to transform and to change, and to just move forward and keep going. And I hope that this session has helped in having to think about what those key metrics might look like. And I would be absolutely honored to get in touch and to kind of keep the conversation going, because it's so exciting. And I hope, it's something that you guys are really looking forward to learning more about, because profit and finance should not be scary. It actually needs to be your friend and your ally in your journey in entrepreneurship. So thank you, Paula, so much for having me. And I'm really, really happy to be here and to have met you all.
Thank you, Lauren. Thank you, Max, for connecting us as well.
Yes.
And thank you, Ant, for the opening presentation with us. And we'll see you guys then. So guys, just remember that on Monday evening, you need to send us your pitch deck with your final idea. And one of the slides is about finance. How are you making money, and what's your financial forecast? So now you guys have learned some very important lessons around how to manage, how to budget, and also how to keep the costs low. So yes, so do a combination of everything that we just explained. Maybe watch this video again slowly and take notes. And if you've got any questions, just put any messages underneath this chat over the Facebook group, and we'll go over and we'll help you guys, or contact us directly on Instagram. Big hugs. Have an amazing Friday. Thank you, Lauren. Thank you, Max.
Thank you, Paula. Have a great day, everyone.
Bye.
Thank you, Max. Bye, Lauren. Thank you. Bye.
Bye.